So let's start with this lemonade setup. So the characteristics of this lemonade, crazy name from 2020, 2021, sat in a base, what, 2, 3, 4 years. We killed it towards the end of last year. Out of this stage 1 base, stage 2 breakout here. It fades the move, gives it back, retests the base here, and then continues on. So it's in this stage 2 breakout phase, and let's get it without the earnings. So I know coming into the day, it's consolidating here in this little descending flag, right? And I see on the morning that it's gapping up on earnings. So I remember that Lemonade has a huge short float. 30% of the float is short. So that means 30% of the outstanding shares are short. If this name rips and catches serious momentum, all those people are losing money at a very fast clip. They're going to have to cover their position by buying it, which creates further momentum to the upside. So we love when these names have huge catalysts to break out to the upside because the move is going to be so much more ferocious because of shorts having to cover and creating momentum. So we know the name is highly shorted. We love that characteristic of a name gapping up on earnings. And then we go look at the earnings. Let's check them out. So they're not groundbreaking earnings. They're supposed to lose 80 cents, but they beat by 20 cents, so they lost 60 cents, right? So they're getting closer to profitability. Revenue is growing 35% year over year. So they're okay. Nothing, crazy. So the earnings they're solid. They're good. They're not great by any means. We're not seeing like 100% year over year revenue growth or something like that. But we know this name has a 30% short float. It's in a stage 2 breakout, gapping up on earnings. So this is and sitting in this descending channel and looking to open up at kind of the top end of the channel. And we'll talk about what I was seeing during the day. So here's the chat during the day. This is what really enticed me to the name. So we love when names gap up on earnings. This is the pre-market action. Gaps up on earnings and it pushes up to 42. And there's a clear seller there, right? Pushes up to 42, smack down, makes another run, smack down. Some volume comes in pre-market, another run to 42, smack down. So I see that seller there pre-market, right? And then I head over to the weekly chart, and with the gap up, this was the gap, So I know that here are my 2 layers of probability very quickly, right? If this seller gets taken out, right, stock's probably going to have a move higher on earnings, taking that resistance out, right? And then let's add the next layer of probability to the trade. So the highs of this candle are the exact area of the descending channel. So if that seller gets taken out, it's A, looking to create that momentum move to the upside with the huge short squeeze, and 2, it's this descending channel breakout on earnings. So here's how we trade it, and then you look at, and here's me zooming out on the weekly chart, and this is all at 6 a.m. when I'm kind of deciding on the setup. We see it had that breakout here, retest the level. It's still in the stage 2 uptrend, and now if it can break this area, that would really confirm the trade. Let's see, market opens. And I talk about, I bought that lemonade opening print right there. All right, so let's go over the trade here. I'll show you how I traded it. So you see, I bought the opening print and I kicked into strength. And I bought the opening print, kicked into strength. We zoom out. We can see I held on for the swing. Took some more off into strength. Day 2. And then when it pushed higher on day 3 and I saw it was so extended from the 5 EMA, I decided to do another trim. And that ended up being a pretty good decision, it seems like, so far. So let's look at the actual executions and let's look at the pre-market seller. He's a big part of the equation. So, right, so I pointed out that pre-market seller. I simply had a buy stop through these highs. Whatever the highs are, I put a buy stop through there. I think it's 42 on the nose. And my original stop is going to be the last pivot low on the pre-market chart. I like looking at 30-minute charts. I try to give my trade probability the best chance of success while also having the risk reward equation in my mind. But once this stock extends, once I get a few bucks, I'm just moving it up to low a day. Looking at that as confirmation that I'm right on the trade and I want to decrease my risk. And then if it does come down and take out that low of the day, it very much likely comes out and takes this last pivot out as well. So, but I'm not going to do it in the opening print because in case it just bop, 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 and then goes, they kind of trade around the resistance area for a little bit, a couple minutes sometimes. So I try to give it that initial room with my initial stop, but then when I see it extend, my stop just up to these lows. Boom. Price is 42, 41, and these look like quick kicks, but in reality, these are, let's see. I started taking off 46, 36. I think it was my first kick. My price is 42. My stop is 41, and I made $4.36 on that first kick, 4.36 to 1, right? So all these kicks are above 5 to 1. This one's about 8 to 1, 9 to 1 up here. So I'm still sitting with about 25% of my position, and if this flags out and continues, I'll probably add back to the position. But that's the crux of the trade right there, and it's an ongoing trade. The important factors to take away that I got that fast move, and I was up 5, 6, 7 times my risk. So I began to take profit and take a chunk off because it's not guaranteed that this name is going to hold its gain on earnings. And now let's look at LEU, a name that did not hold its gains on earnings but still did very well. All right, so LEU is in the hottest theme, the nuclear energy theme. All right, so LEU. So we know it's, and now this stock, we're looking at this stock for a completely different reason. Theme. The strongest themes continue to dominate the market. All the biggest gainers every year are from the strongest themes. These themes don't trade as much on fundamentals because everyone gets so excited about whatever theme is going on. So right now it's the nuclear theme as we're seeing that transition in the United States. So Centrus, their earnings. So here's the important parts to take away. EPS of $1.59 beats by 78 cents. So you just do some quick math there, right? 78 cents minus 159, 81 cents. So they're supposed to do 81 cents, and they beat that number by 78 cents, right? That's almost 100%. You don't have to be a mathematician to do that. So obviously some accounting tricks were played if, their revenue is not going crazy, but their EPS number is. Whatever. We're seeing that near 100% EPS growth. That's pretty good for a pop, and it's in a strong theme. And again, it gave us this pre-market flag that we love to buy through. Here's the after-hours earnings move. Makes a run up to this 235, and we see it flagging there. It tries to break it after hours. Can't really do it. Not much volume there. They come through again, and then pre-market, they're kind of playing a game here. And I think I end up buying through the 1 minute high. But it all started with seeing this seller that's sitting there, and the name is opening up around that resistance level, along with the other factors, the other layers of probability in the trade. Hottest theme, EPS beat like crazy. So technical execution. This one, I did end up buying through the 1 minute high. And that's why I'm saying these things are low probability. You got to be very selective with the names you choose these setups on, because they're just that. They're very fast trading. They can yield significant rewards, but they can also fail. And a lot more fail than are successful. So what I'm constantly working on is my criteria, confining my criteria to only find the winner. So I took 2 this week. This one didn't work out as well as Lemonade, but I still made, I think, 2.5 times my risk. I'll go over the executions here. So I buy this 237.30 through the 1 minute high because I know the seller's sitting here in this area. So my stop at the time is down to here. We see this 230 is the last kind of time it pivoted. Not great volume, but it kind of gives you somewhere that a buyer's showing up. So I buy this 237. My original stop is this 230 because it can get a little funky off that 1 minute. And then when I see it extend, right, I'm going to move my stop up to here. So price 237.50, low of day 234. So now my risk is $3.50. And where do I kick here? This kick is, let's see, 252.69. So what's the math there? 237, $3.50 risk, 252, almost already making 15 bucks on 350 risk, 4 to 1 ish. And then the kicks get better than that, 5 to 1 ish over here. Then these are 6 to 1 kicks. So I actually end up selling 2/3 of this one this day, and what actually ends up happening is the rest fails. So I end up making, I don't know the math, but I think I made 2.5, 3 times my risk. I had these great kicks. I gave some back. But because I'm very focused on the risk-reward aspect of the trade, and I understand that not all of them are going to work on day one, I have a roadmap to kick into strength and make some money, and then give it a chance. If it wants to turn into a crazy swing trade that I'm in all quarter, great. If not, I get out, at a low of day right there. So that's kind of the gist of those two different scenarios. I hope you enjoyed the video.